Let's talk about a few individual stocks that you should keep on your radar today. And I've picked Reliance Industries. Of course, it has moved up and finally participated in yesterday's move. It moved up as much as 2% or thereabouts, contributed quite a bit. But it could be under pressure today if you look at the latest announcement from Donald Trump. And I'm alluding to what he said about the 25% tariffs on countries that are buying Venezuelan oil. This, of course, is effective the 2nd of April. Reliance Industries is the sole Indian importer and, of course, as a result of that, faces a negative impact. The exact impact is uncertain because of potential volume adjustments that they could take. Reliance Industries, of course, a large buyer of international oil as well. They can switch to other spot market fuels as well. That's the view as of now. So the implications not entirely known. Sentimentally, though, it could have a negative effect. RVNL is the next one on the list, and this is another order win that it has gotten, 116 crore or thereabouts from the Central Railway. This is not a very large order in the context of what RVNL itself has gotten in the recent past, but bear in mind that the stock was up about 3% yesterday, and it has also gained quite considerably over the last 5 trading sessions, as much as 12% or thereabouts. So this could also be seen as a positive. Suzlon is the next one, and this is a Motilal Oswal initiation of coverage with a buy rating and a target price of as much as 70. It says that the company is riding, and it's an interesting statement that they're making, riding the winds of growth. Of course, this is a wind energy player. It is, of course, going to be critical, and this is not something that is new, but the brokerage is taking account of that. It's going to be critical in India's renewable future, because if India is to achieve its targets of renewable capacity by 2030, then wind energy has to more than double the capacity. This is, of course, a bellwether play on India's wind energy potential, and domestic players are well placed if the Niti Aayog pushes for local content in that space. Competition is rising, but the pie is big enough for economies of scale to drive adjusted PAT compounded annual growth rate of 63%, according to Motilal Oswal, between FY24 and 27. And that's quite a significant growth. EBITDA margin is healthy. The tax shield benefits until FY27 also bode well, and the balance sheet will be placed to fund future growth as well. It also says, Motilal, that Suzlon is reasonably priced versus capital goods peers.
So these are the 3 ones, but on my list, an interesting one which I have is a Restaurant Brands Asia. Now, this is the operator of Burger King and Popeyes in India. They've actually launched a QIP, and this is to raise around 500 odd crores. The base deal size is set at around 400 odd crores with an indicative price of almost around 60 rupees per share. The floor price for issue is at 62.32, and it reflects almost a 6.5% to 7% discount with regards to its last closing. Now, the issuance will result in almost a 16 to 17% expansion in the company's share capital. Motilal Oswal Investment Advisors is the sole book running lead manager to the offering. And clearly, if you talk about Restaurant Brands Asia, they reported almost a loss of around 50 odd crores, if I'm not mistaken, in the third quarter of FY25. And a loss of around versus a loss of around 36 odd crores in the same period last year. So the losses had expanded for this counter, and the stock is down almost 17 to 18% in the last 3 months. If you talk about the overall company as well, it operates almost 510 stores in India, and it's almost up around by 50 stores on a quarter-on-quarter basis, and it added around 69 stores on a year-on-year basis. So this is going to be one that we'll be watching out for, because the funds that they will raise will be used to prepay debt as well as for the capex plans. How much will be used for what purpose is not known, so watch out for Restaurant Brand Retail. The second is Easy Trip Planners, I beg your pardon. Now, they are looking to invest and purchase 49% stake in Big Charter. To know about Big Charter, that's a prominent player in India's charter aviation sector. They will be infusing around 1,000 Brazilian reals in the Brazil-based arm of the company. Again, they'll be infusing some amount in their Saudi-based arm as well, and around $10,000 in the US-based arm. Clearly, the reason why they're doing this is because they're looking to expand the charter and non-scheduled aviation market, is what they're saying. What they're saying is that they'll democratize travel, particularly in Tier 2 and Tier 3 cities. And if you talk about FY24, Big Charter generated almost 130 odd crores in terms of revenue. So Easy Trip Planners is going to be in focus. I mean, this has been a very interesting stock, Alex, if you think, because the kind of downtick that we've seen on this counter, a similar uptick has also come in at similar levels. So if you just pull up a 12-month chart, there you go 38, 39%, but you'll see those bouts of upticks that have come in, in terms of Easy Trip Planners, and they're saying that they will expand their global presence by doing something like this. So let's see to what benefit it comes in.
The stock was under pressure, of course, because of promoters selling, I believe. If I remember correctly, about
exactly.
6 months
back. It was
back.
the previous time when the promoters were selling, though after the first bout of selling, you did have one of the promoters who came out and said that this will be the last round and they're not looking to offload further. So probably, I think business is what we need to watch out for.